Hello, I'm Robin Gibson, and this is the Harvard House Money Morsel. Welcome back. Thank you for joining us again. Don't forget to like and subscribe and click the bell so you get a notification when we're releasing a new video. I'm sitting today with Michael Porter. Hello, Michael.
Oh, morning, Robin.
The rain is gently falling on the roof, which is quite a relief after the hot weekend. But another relief was we've come out of grey listing on Friday, Michael.
Yeah, Robin, it's amazing. We went into grey listing, I think it was February or March 2023. So to sort of come out 2.5 years later it's actually a pretty good effort. It's a relatively short time to be on the grey listing, and it does speak to obviously some improvements. I mean, I think everybody in the country would argue that we need to do more on prosecutions and seeing people behind bars.
Yes.
But I think sometimes behind the scenes things do get done. And I mean, we'll also be aware, I mean, our accounting clients and trust clients of new things like the beneficial register owners and all those other requirements that have come into place now that try and bring more transparency to these things. So yeah, Robin, it's we're out of the grey list. I think it really is a signal. It's a release on I suppose fixed income investment in the country, and our bonds are very attractive. 6% real yields on our bonds in this country versus probably 1.5% overseas, and so I think our bonds remain firmly underpinned. And we chatted last week about bond yields below 9%, which is the first time since 2018.
Yes.
So yeah, there's a very firm underpin. It's not just the inflation targeting story, but it's also some improvements in other aspects, Robin.
Yeah. So, Michael, I saw one of the consequences of that, the rand strengthened quite nicely on Friday afternoon. But all those things, they kind of feed into the local environment. What are we seeing on the local environment? I know we've had a few company results and that kind of thing. So,
well, I think one thing, Robin, is that definitely SA Inc. shares have underperformed this year. Retailers, some of the sort of construction sites, the banks, they've definitely underperformed the insurers. But in the last maybe week or maybe it's longer than that, 3 weeks, there's been a little bit of a turn. I think allied to this, there's quite a lot going overseas. So I'll come back to your question in a moment. But,
okay.
We've got a big, there's a supposed trade deal between the US and China emerging this week that the market's quite excited about. So the gold price has come off. I think the dollar's firmed a little bit, just in some of the global things that are going on. And so, yeah, I think, what's driven our market higher this year is obviously the precious metals and platinum and gold. But I think some of those they're losing their shine. I think they're just going to consolidate for a bit. It's been a busy run, and I think you still want to have gold in your portfolio. So I don't think that whole trade is over. I think that's another couple of years to play out. But some of the SA Inc. stories are really starting to come through, and the insurers. I mean, Sanlam's probably at a 10-year high. I mean, the banks are probably a little bit laggards, but with bond yields falling, there's room for those sectors to rally, Robin, definitely. Yes. And, even last week we saw, Robin, some GDP upgrades. It's 0.1%. It's like 1 to 1.1% or 1.2%. But I think for us, again, Robin, at least the momentum is moving in the right direction. And yes, then we had Afrimat's results on Thursday last week. Very strong results. They're coming off a weak base. They had a tough time, but I think for me what stood out is that on some of the domestic demand, aggregates, cement, there is demand and they're busy. It's not that things are shooting the lights out, but the CEO of Afrimat made the comment. He said the construction industry is a lot more buoyant than what people give it credit for. So it's also just nice to hear that things are happening maybe out of the eye of the camera and out of the eye of the headlights.
Yeah, Michael, it's interesting. I had occasion to go down to Durban twice in the last week, and they've opened that new section between Ashburton and sort of Cato Ridge.
Yeah.
Sure. What a difference 4 almost 5 lanes makes into the flow, So.
Absolutely. And Robex had a trading update last week, and they were obviously they've been busy on the N3, but they've also been awarded some quite big contracts on the N2, sort of between, I suppose, Shishlui, that kind of area, and Ermelo, 2 different sections. And I don't know if people have driven that road, but once you get past Richards Bay on the N2, it's a free
Nightmare.
ball up
Yeah,
there,
yeah.
and so it'll be really good if they're starting to really do some work on the roads around Pongola and the southern bit of Swaziland as well, because those are dangerous roads. So yeah, I just think there's stuff going on, Robin, that it's nice to see, and it's nice that it's keeping construction firms busy. It's keeping crews busy. It's keeping employment going. Yeah.
And Michael, I mean, I want to come back to, we often talk about the fact that companies are not countries, countries not companies. It's one of our kind of mantras here. And we have often said to investors in difficult times, don't follow news flow, follow what's actually happening on the ground. And we've got this real disconnect, because if you're reading the news, I mean, it's all about our corrupt police and just the cartels and the tenders, and yet in the background we're having this slow recovery, economic recovery, aren't we? It's such a good example of the disconnect between what you're reading in the newspaper and what's actually happening on the ground.
Yeah. I think, Robin, businesses ultimately are there to make decisions and to move things forward. I mean, even on our own little ecosystem here, we make decisions. We're about to renovate our offices and build some extra space, which despite everything that's going on in the country, we need to make decisions that are right for each business, and so business people do that. I think if you overlay those two things, I think, what's so frustrating is that what could it be like if you had more confidence, if you had a better functioning system, if you didn't have all the infighting and everything like that, we could have growth that was so much stronger. So yes, Robin, you make decisions and you limp along, but I think, the more these things get aired, hopefully, I say it's not cathartic, it's absolutely horrendous how deep the rot is, but are we on a process of renewal? I suppose that's the question. But business keeps on making decisions. And, just last week, Robin, sorry, we've got a new listing on the JSE, well, next week, but the book's closed tomorrow. Optasia, it's being listed by some private equity owners. They operate in the fintech space. Last week, we saw Coca-Cola Beverages Africa, which we've been expecting the listing for quite some time. That's actually going to get sold to Coca-Cola Hellenic, which is basically a London-based sort of European bottler. But that's going to have a secondary listing on the JSE. So there is a little bit of activity. There's obviously also a few delistings. Barlow World's been delisted. How long has that been listed for? In various shapes, forms, and sizes. So there's quite a lot of activity. But yeah, Robin, I think businesses are just getting on with it and looking for growth where they can, and that's what we mandate management to do.
100%. Yeah, and we're looking for those opportunities. Michael, thank you for giving us that insight. Thank you for joining us. Don't forget to like and subscribe, and we'll catch you next time. Bye bye.